Hello traders, Gary Wagner here, just about 10:40 in Honolulu, 4:40 in New York on Tuesday, April 26, 2016, and this is Trending Markets. We are looking at the Dow Jones Industrial Average, still under 18,000, but eking out the smallest of gains today, up 13 points on the day, 17,990. Now, when we look at the Standard & Poor's, that was also up higher, nominally higher, and that is trading currently at 2085, 2085 on the day, putting it up about 1.5 points. We are looking at the Standard & Poor's E-mini chart. This E-mini chart is a daily chart, and I do have something that I find to be quite interesting when we look at this chart, and it's just recently happened. If you consider the way that this market has gone up, it's gone up, but it's gone up, of course, with a real series of corrections in the market, and they've been shallow at best. And so my belief is that we are currently in some sort of a fifth wave, and the market comes up, it genuinely softens here and finds an area in which it's going to consolidate. You can see that it has very, very good support at about 2080. But what I find most interesting is when we look at our short-term 50-day moving average, which is this dotted red line, and compare it to our 200-day moving average, which is this solid blue line, we absolutely have seen the short-term moving average cross above the longer-term moving average, and that is extremely bullish on a technical basis. Now, it always doesn't really pan out, and there's times that you'll see that happen, and it happened right before actually a major sell-off in the market. And I draw your attention to this area right here that I've highlighted in yellow. And when we do that, you can see what I'm talking about. You have your moving average right here. This, of course, is your long-standing moving average, the 200-day. You have your 50-day moving average, and it comes in and you get your cross right there. However, it's very, very short-lived because that market kind of turns around. It really signaled the very, very top of the market, and then it came in and then it crossed below. So it doesn't always signal that we have a pivotal turnaround, but it is certainly something that we absolutely need to watch because the occurrence is pretty rare when you actually see this cross, such as right here. You got this cross right here, and of course that really signaled a tremendous move down. But since then, take a look. You had a widening of the 50-day and then a narrowing at the beginning of March. As this market moved up, of course, moving averages are always going to lag behind actual market trends and moves. They're averages. They have to be a lagging indicator. But the fact that we have actually seen this cross to me is significant. With the FOMC meeting getting underway today, concluding tomorrow, my sense is if we see some bullish sentiment and we do see this market begin to spike up, we do want to get aboard because the next, I believe, if we start getting a solid rally, we're going to attempt to at least take out these most recent highs here that we have flirted with, but at least this year have not traded above. And so in terms of other markets that we follow, fairly substantial move in crude light today, back above $44, $44.68, up over $2 a barrel, up almost 5% on the day, 4.81% higher. You can see this spike that it has. And the one thing that I am finding interesting is that it does appear as though we're going to get the market closing at the most recent highs. The market has not traded to this level since we would really need to go back to November and December of last year. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow and update you on the conclusion of the FOMC meeting. Bye-bye.